So what should I do? Should I sell? Should I buy? Should I hold? A lot of people are asking me the same question given the chaos that basically controls the market right now. There's no doubt in my mind that you are confused about what's going on. We had a couple of weeks of total carnage. Then yesterday, one of the best days we have ever seen in the stock market. And that is confusing for everyone. Now, you're going to hear a lot of traders brag about how much money they've made yesterday, how much money they've made over the past few weeks. Traders love volatility, and that's okay. That's going to happen. But you got to remember that you are a long-term investor. Now, if you're a long-term investor and your time horizon is 5 to 10 years, you're looking at a market that basically is the same setup that we had just a couple of weeks ago. Nothing really changed. Now, we had a little bit of a discount over the past few weeks, and a lot of retail investors, they complain. When market flies up, they complain, oh, I wish we had a little bit of a discount. I wish for a dip. And when those discounts happen, people get too scared to buy them. And that's okay. I'm not mad and I'm not judging. I'm just saying that's the way it is. Now, I educate my community better than that, and we actually admire the dips, but 90% of retail investors, when the desired dip actually comes, they're too afraid to take advantage. That's pretty much what happened over the past few weeks. Now, a lot of people today are saying, well, Tom, I've missed it. Yesterday, the window of opportunity got closed. I wish I could have grabbed it. It's not true. You're going to have another opportunity and another opportunity, and there's going to be endless amounts of opportunities to buy the dip and get into the market. People thought they missed out in 2024. We're now back a year and a few months later to the same point we were in 2024. Nobody is in the rush. This is not a sprint. This is a marathon. Now, in this video, I'm going to share with you my entire strategy for 2025, how I'm going to bulletproof my portfolio, and obviously it goes a little bit deeper than just dollar cost average. There's a lot of strategies, a lot of things you got to do to make sure your portfolio is bulletproof against this chaotic year, because the next 6 to 12 months, however you're going to spend it, are going to be absolutely chaos. So you got to be ready for this. You definitely don't want to miss today's video. So don't click nothing, don't smash nothing, don't buy nothing. Listen, first of all, obviously a few words about the CPI data came out today, cooler than expected. A lot of people were expecting the market to bounce because of this. Maybe it will happen, but you got to remember that the CPI data that we're getting right now, it basically happened before the tariff drama. So these numbers are basically pre-tariffs. And a lot of people are expecting that tariffs are going to push prices up, push inflation up. So that's why people are looking at these CPI data numbers with a little bit of a skepticism. Now, on the flip side, talking about the tariffs, I think there's a lot of misunderstanding about what's going on with the tariff drama in Trump. Now, this is not a political video. I'm not going to talk politics here. Not that I'm afraid to talk about my political stance, but it's not going to make you any money. So it's pointless. So let's talk about things that actually make you money. And what will make you money is understanding what's actually going on here. So I want you to put your opinions about Trump to the side, whether you're a fan or a hater. It doesn't matter. It's all about money today. So the tariff drama of Trump is not random. And I want you to understand this. There's a rationale here. Now, the rationale here is that the U.S. has a major trade deficit with a lot of countries, but mainly it's China. China is the prime example of a huge trade deficit. Basically, the U.S. buys a lot more goods than China buys from the U.S. And for decades, the United States basically ignored this problem and kick the can down the road. And previous administrations basically didn't give a frick about this and never addressed the issues. And basically what happened is that over the past 35 years, the United States have absolutely annihilated and imploded and killed its own manufacturing base. And people kind of forget about it, that the US actually used to make stuff. It wasn't always a service-based economy. And right now, the long-term strategic effects of losing the manufacturing base of America actually start to reveal themselves. And there's a lot of risk in this. The whole idea of America being the strongest, best economy in the world, it's kind of based on the idea that the U.S. industry can be competitive globally. And now it's not because of China. China is basically dominating because of the cheap prices, because of the subsidies, and a lot of these things. And another major grievance here is that a lot of Chinese companies, because they own the manufacturing now, so they basically steal and knock off intellectual property, know-how, and that's not a huge secret. We all know this has been going on, but people have been ignoring this for years. Now, Trump's strategy is a little bit unconventional. I'll give you that, right? A lot of people would use a scalpel. They'll be more diplomatic, but Trump is an agent of chaos, and he's going to take a sledgehammer to any kind of problem, and this is one big sledgehammer. And he's, notorious for being very, very aggressive. Right now, the United States is saying to China, we're done playing nice. We have enjoyed you producing goods for us very, very cheaply, and that helped us boost the revenues and the margins of American companies. And because of that, we have put up with your BS for many, many decades. But now that is over. You have crossed the line. China has taken a very adversarial role against America with Russia, with Iran. And essentially, the US administration is now saying, look, if you want to use us to grow your economy exponentially, and then you're going to backstab us, that's not going to fly. You have to realign with us. And that's the purpose of this. Not so much the economic stuff. Obviously, that's kind of a side effect. But it's more about where China is aligned on the global stage. The United States is basically saying to China, look, folks, we are your biggest market. If you don't sell to us, you can still sell to Russia and to the EU, but you're going to lose a huge chunk of your business, essentially rendering your whole economy useless. If we stop buying, sure, we're going to get hurt. Sure, we're going to cry and it's going to be painful. We're going to increase inflation and our consumers are going to pay more. And maybe we even go to recession. Maybe. But your economy, China, that thing is going to collapse because your entire economy is predicated on two things. Number one is that Ponzi scheme you got over there for the real estate market. That's 1/3 of the economy. But the other 2/3 are basically selling to the United States market. And if we block this market by imposing a 100% tariff, which is essentially like closing down that supply chain, well, we're going to suffer, but you're going to die. Essentially, they're playing hardball. This is Trump style. I'm not even surprised about that. And obviously, it's going to be like that scene from Breaking Bad when Gustavo poisons Don Eladio. So Don Eladio dies, but Gustavo takes a little pill and then he feels really, really bad, but he survives. That's the analogy I want to use here in case you've watched the show. So yes, the US will suffer. China will die. That's the whole point here. Now, until China finally gives in and actually signs a deal with America that actually favors the Trump administration just the way they like it, this standoff is going to continue. It's going to create a lot of pain, a lot of volatility, a lot of chaos. It's going to be unpleasant. But it's basically a game of chicken. Who's going to crack first? And trust me, the United States is not going to crack first because, unlike China, America can print money endlessly. Because you see, the United States is the world's reserve currency. And that's not going to change anytime soon, at least not in the next 50 years. And as long as that's the case, the US can just endlessly print money to pump the economy and keep it alive for as long as necessary until China, economically, of course, dies. Sure, it's going to raise inflation. Obviously, it's going to be unpleasant. All this is true, but the US only comes up on top here in every scenario. Whether China gives in fast or China gives in slow, it doesn't matter. The US wins this. And if you understand that, investing long-term in the US market is probably the smartest thing you can do if you have a long-term mindset. The lesson is that time in the market is a lot more important than timing the market. If you sold out, if you panic sold, well, you missed out on one of the greatest days in the history of the stock market. Emotional control is 90% of investing. I keep talking about it, and people always ask me, Tom, why are you so repetitive about emotional control, about DCA, about all these things? Why you keep repeating this? Because my community, the people in my academy, patreon.com/Tom Nash, my community, my students, they haven't freaked out. They haven't panicked. We were celebrating for the past 2 weeks for all the discounts. And yesterday, we reaped the benefits. And maybe the stock market goes up 10,000 points. Maybe it drops 10,000 points. Who knows? We don't care what happens. We don't predict. We prepare. Now, look, Trump basically needs to open Patreon at this point because Trump literally told us to start buying a couple of minutes before this thing was announced. If Trump sets up a Patreon with stock alerts and buy alerts, I'm going to sign up because this man knows exactly what's going on. He's not shy about sharing it. I think he needs to monetize this. Now look, jokes aside, obviously you learned an important lesson. Whatever happens next, maybe we go down the escalator, maybe we drop off a cliff, I don't care. The best time to buy is in a bear market. Yesterday was a little example of that. Yesterday just shows you how quickly markets can rebound when sentiment changes and panic subsides. And of course, one of the main lessons from yesterday is that China is the story here. All other countries are basically just set pieces. It's all about China. I told you in the beginning. That's why the Chinese are not going to get off scotch-free from this. He's not a back down. He's going to push China because China has no leverage. They have no cards in this game. Now, my question to all the analysts who have downgraded the S&P 500 over the past few weeks, are they going to upgrade it now that it's up? I mean, it's a bunch of BS noise. Now, You saw yesterday, and you saw over the past few weeks, why retail investors are always on the short end of the stick. Why these guys always get screwed. And yesterday was a prime example. If you see new or inexperienced investors, people who start investing over the past 6 months, 12 months, they make decisions based on immediate emotions a lot more than you guys, the more experienced people. They make decisions based on fear or greed. And I always explain, fear and greed are basically twin brothers. They're both evil. You shouldn't be buying like crazy because the stock is up. You shouldn't be selling like crazy because the stock is down. And a lot of these investors, they jump into the stock market and they come in a bull run and they get overconfident and they only see constant gains. And the first time they see some losses, panic sets in and they actually create the worst possible thing for themselves, selling at the bottom. And then they buy back again at the top. Once the market falls enough for these guys to start seeing actual red in their portfolio, which they've never seen before, all hell breaks loose. They start selling. They get emotionally anxious and panic and all that stuff. Now, look, I don't know what comes next. I don't know if we drop. I don't know if we go up. But right now, what you've seen the last couple of weeks, this is just a regular correction. Nothing dramatic has happened yet. If we see an actual crash like 2008 or 2000, you're going to feel it. What we've seen over the past 2 weeks, that's just turbulence. Now, look, a lot of people kind of misunderstand this buying the dip concept because I always talk about, buy the dip, buy the dip. Buying the dip wrong can be just as bad as panic selling, if not worse. In September 2008, we had Lehman Brothers. A lot of you don't know what that is, but for the younger generation, Lehman Brothers was the Rizzle Dizzle. They were the kings of Wall Street. They basically went bankrupt. And a lot of people assumed this was the bottom, started buying in like crazy. And then the S&P 500 continued to fall all the way down to March 2009, 6 months later. And then the same people who were buying the dip like crazy capitulated, sold right at the bottom. And then the market spiked up and they said, hey, we're out for good. We don't understand what we're doing. So staying disciplined is super important, whether it's 2008 or 2025, it doesn't matter. Now, a lot of people in the comment will be cynics and they'll tell you, well, this is just DCA bullshit. We don't have time for this. Who has 10 years? Who has 15 years? Who have enough money to continue DCA? Look, in my academy, I explain all of this. How anyone, no matter what your time horizon is, no matter how much income you got, no matter what is your financial situation, anyone can stay disciplined. Anyone can continue to DCA. All of these things you can learn in the academy, or you can stay on the sidelines and complain like these guys. But guess what? The comments complainers are not making money in this market. We, over the past 3 years, have made a lot of money. My community over the past 2 years have made generational wealth because we actually implement this. We look at this day-to-day, week-to-week price fluctuations as nothing but, just noise. Who cares? Who cares? Markets move like crazy on the slightest rumor. You've seen what happened yesterday. This is unpredictable. Nobody can time this. And people look for these green days to continue forever. They cannot, process red days. That's unrealistic. That's not how the market works. Obviously, what we've seen over the past 5 years mostly was green because we've printed a shit ton of money. That thing is over. So you got to get used to the normal market again. But it doesn't matter because over a multi-year horizon, every big drop is always followed by a massive bull market. A drop is usually 10 months. A bull market is usually 5 years. That stat is based on the 100 years of stock market. That's never going to change. I want you to pay attention and understand that what happened over the past few weeks is just a little example of the overall investing journey you're going to have for the next 10, 15, 20 years. Don't ever panic sell during a major drawdown. It's never a good idea. No matter how low the bottom is, no matter how much more it drops, panic selling is never a good idea. Never. Number 2, you have to manage risk before the events happen, not during. I have 17,000 members in my academy. I have almost 500,000 subscribers on my YouTube channel. Most people, statistically, they don't sign up for the academy. And that's okay. They love the videos, they enjoy the videos. But then, when they sign up? They sign up when the market starts doing this. Then, all of a sudden, during the crisis, they sign up and looking for quick solutions. You got to do all this before this happens. You have to have a plan and put it in motion before the crisis hits you. So, just because right now we have a little bit of a breather, it's not a time to forget this. It's time to join up, patreon.com/TomNash, and build a strategy for the next year, 2 years, 3 years, so you don't predict, you prepare. So you have a plan in motion before the bad event starts happening. Number 3, you have to consider dip buying as an essential way of life. A lot of people think that dip buying is a decision you make once the stocks drop. Oh my God, is this a good time to buy the dip? Is this not a good time to buy the dip? That's an irrelevant question. If you want to own a stock or a B stock or a C stock or this index, it doesn't matter. There's no good or bad time to buy. You buy at all times. Your dollar cost average, high rain, high water, high tide, doesn't matter. And if it drops, you continue to do the same thing just with bigger amounts of investing. That's the whole purpose of what we're doing here. Buying the dip is not something you do out of the blue. It's not sporadic. It's very methodical. You always buy and you buy a little bit more when it drops. DCA is a way of investing. It's a way of life. It's not a decision that you make here and there. Now, a lot of people ask me, well, Tom, how do I always have money to DCA? I'm not rich. You ain't got to be rich to DCA at all times. I explained this many times in my academy. There is a system in which no matter how much you're making per year, 50,000 or 500,000, you always have enough capital to deploy at all times. Now, another thing I want to pay attention to is that long-term outlook here is critical. A lot of people look at the short-term price action and they think this is reality. If you zoom out and you look at the S&P 500 over the past 15 years and you start thinking about all the crazy stuff that happened over the past 15 years in the world, in America, in the stock market, a lot of reasons to sell, and yet the S&P 500 did 700% in 15 years. That's one of the best performing asset classes you can think of. Another thing here is you gotta be always prepped for a major big time crisis ahead. Nobody knows when that crisis happens. We're talking about a 2000, 2008 level of a crash. It can always happen. You have to be prepared for it. You can't just say kumbaya and just relax and hope it doesn't happen. You have to be set up for that. And there's ways to prepare. Again, teach that in the academy. And of course, psychological resilience. A lot of people kind of miss this point. If you look at the top 10 tennis players in the world, the biggest differentiator is this, not their skill set. They're all elite tennis players. What they have here is the big differentiator. The same thing with Michael Jordan, what he had here, his ability to rise up. Joe Montana, I can name it. Psychology, resilience, emotional control, all these things matter probably more than anything else. And of course, here's the final 5 things. Get out of margin. Margin is bad. Margin is not good. There's no way you ever can make an argument that margin is good to use for retail investors. Margin is the death of portfolios. Never ever get into margin. Number 2, understand macro, but don't obsess over it. Understand it, get a good idea of it, don't obsess. That's going to cause you to make irrational decisions, emotional decisions. Of course, keeping cash on the sideline is one of the most important elements of DCA. We teach this in the academy. I'm going to give you away the formula real quick here. Basically what we do, and we teach the system, is we deploy only 50% of our free cash flow at the end of the month. And that way, when we have a dip, we always have sideline money that we've been accumulating when the market was high, which we can deploy when the market goes a little bit of a turbulent time. And of course, diversify your portfolio. A lot of people DM me and say, oh, I'm 80% Palantir, I'm 80% Tesla. You have to have a diversified portfolio. You have to be smart. You have to be responsible. You can't go all in on one stock, no matter how much you love it. You have to invest in quality. Quality over everything else. If you're buying stocks, you're buying a piece of the company. If you invest in quality companies over the course of the next 15 years, there's no way the stock market is not going to reward you. Time in the stock market is the best friend of a great company. Never forget it. And speaking of time, probably the most important principle of them all, timing the market is a hell of a lot better than time in the market. If you've missed the top 10 days over the past 20 years in the stock market, a day like yesterday, which was out of the blue, your return will be slashed by 50% in 20 years because of 10 meager days. Yesterday was prime example. Stay invested, stay responsible, stay diligent, stay stoic, emotional control, all of these things. We teach that in the academy. Patreon.com/Tom Nash. I have plenty of students. I'm doing just fine. I want you guys to join because I want to reach a bigger audience. I don't want you being that 90% club of people who lose money. Join up, try it out. If you don't like it, 30 days money back guarantee to anyone. Always the policy for me. See you next one. Peace.